So I've been working with Sod and Baselane for goodness, a good 6, 7 months now, trying to make sure that we have so many good things for you guys. Everybody that's a part of Master Passive Income, everybody listens to the podcast as well as all my students as well. And so this will be on YouTube, and so we'll also be able to watch this in the end. But so I personally have lots of different software and different things that I use in my investing business, and from property managers to like all these things in my business. But I am so glad that now I absolutely can just bundle it all together. Like I really don't have to have all these different softwares, all these different things connecting together. Now I just have one. And if you guys have been seeing in the newsletter, now the company that I am moving to, and this is what I suggest for everybody is, well, this is what I'm doing. So if I'm doing it and you want to do it, I wanted to bring on Sod from Baselane to walk us through, number one, how to use Baselane, but at the same time, how we can make sure that we're saving money in our taxes, how, by making sure we're accounting for everything. Because I know if I bring my accountant a shoebox full of receipts and invoices, it's going to cost a lot of money for them to go through all that stuff. How much better would it be if I actually had a system that literally ran through everything? So cool. So we have Sod from Baselane here on with me, and he's going to walk us through. So Sod, thanks so much for being here, man.
Yeah, thank you, Dustin. Very excited to be here, and hello to everybody on the call. My background is actually in financial planning, financial statements. I'm a former CPA as well from the first third of my career. I have been investing in real estate for about 5 years, and really my personal goal was to help generate retirement income for my parents. That's how I started. But it turned out that I really loved it as well. So I started doing more and more of it. And eventually I actually joined Baselane right when it was starting a couple of years ago to help build the tools that I wanted to use, because I was very frustrated with what was out there and I wanted to build something futuristic that all of us can use to scale our portfolios. So super excited to be here. And today, as Dustin mentioned, I'm going to be sharing my screen in a second. We'll be going through a couple of things. So one of those is a quick overview of Baselane, but really focusing in on the tax deductions, on bookkeeping, and sort of my 5-step process to actually do the bookkeeping and keep track of your numbers so you can maximize your deductions at the end of the year every year. And then I've got a fun demo set up where I actually haven't done some of it. So I'm going to be doing some kind of live number auditing and bookkeeping with y'all on Baselane, so I can show you the power of it and how you could potentially use it too to plan ahead and make sure that you're not only aggregating and tracking and optimizing your expenses, but also you're able to maximize your tax deductions throughout the year. So that's the plan. And Dustin, should I go ahead and share the screen, share the presentation?
Right ahead. It's all yours. Oh, and while he's doing that, everybody, when you have questions, we're going to save them till the end, but I want you to also go ahead and put in the chat. So go ahead and put in the chat that you are, whatever questions you have, and I will go through those to make sure that in the end I'll probably bring you on, ask your question, or I'll just ask the question myself. But definitely take full advantage of the chat, ask all your questions in there. And in the chat, I will also put in the link for you to sign up for Baselane. The great thing, Baselane's free. Like, it's so free. Everything's so fantastic and it's free. And I've been working with Baselane to make sure that you guys are going to get really well taken care of for all of our students and everybody at Master Passive Income. So I'll put that in the chat, but ask all your questions in there and then we will get started. So go right ahead, Sod, all yours.
All right. So I already gave a quick intro, but just in case you're wondering, what do I do at Baselane? I lead our business development and partnerships effort, as well as our SEO team. And in terms of what I invest in, so I focus myself on 2 to 4 unit multifamily, so on the smaller side with a focus on BRRRR. That's been my main areas. And well, it looks like somebody's off mute there. Here's the agenda. So we're going to just jump right into it. Quick intro to Baselane, and then importance of bookkeeping, tax deduction review, and how to use Baselane for both of those things. And then we'll have time for Q&A. Okay, so one of the things that we noticed when we started Baselane is that financial services are not really built for real estate investors, as you might have noticed. And what that leads to is investors are forced to navigate a very fragmented ecosystem of products and services and tools that you have to use across the board just to run even even if you have one property or two properties, you still have to use all these tools. And so how do we simplify this for you and really make it so that you can control the numbers and be able to scale? So there's some examples here, and you can see across all the things you do, and this is not everything, you're going to be using multiple types of products and services and relationships, and some of them are costly, some of them are just hard to use, and some of them are very manual. So what does that lead to? What that leads to is an unclear picture of your rental property finances. And you're really, I know, Dustin, you talk about business of your real estate business, and wasted time, lost income, and potentially, which is very dangerous, poor decision making across a very complex set of financial products, right? So this is kind of like what we see happening when we meet people that are looking for a solution, either it's for bookkeeping or banking or kind of all of the above, right? No clear picture of your property finances, maybe lost income tax savings, and you overspent perhaps because you didn't analyze it, countless hours of busy work, and some of it being like very manual and error prone, eventually leading to poor decision making. And so this is why we created Baselane. Baselane was focused on bringing truly the all-in-one platform for you that can do a lot of those things, not just breadth, but also depth, and do it well. And so we started with banking. So we built banking for real estate investors and landlords. We built our own proprietary bookkeeping and expense management system. We built our own reporting and tax related reporting as well. Then we're now building more analytics and business intelligence on top of that. In addition to that, we've started adding core features like property management features like rent collection, tenant portal, lease creation, and several more that are coming. And in addition to all of that, we're also really focused on bringing you value through just embedded financial products that allow you to run your business smoothly. And so that's an overview of Baselane. And if you think about, what the vision is here, it is truly to automate your rental property finances. So we are giving you not only the data, but eventually the insight layer on top of that, so you can understand what the data means, and then you can make informed decisions based on that as you buy your next property, as you make decisions about selling another one, and so on. So that's the overview of Baselane. And I'm actually going to spend a little bit of time I'm sure that a lot of you already know this, but I did want to touch on this topic, which is what are the common tax deductions that we can think about when we talk about tax preparation and tax savings. And this is not going to be a super deep dive. I'm just going to do a high level overview. If you have questions and you want to pause on anything, please let us know. But there's 2 pages here. I want to go through this so you understand, what are the tax deductions we should be thinking about. The reason I bring this up is because, answer first, right? Like if we understand the tax deductions and what's possible, then we know from a bookkeeping perspective, we're not only trying to just, do the book so we understand how much income and expenses we had and how much money we made. We also understand that we're planning ahead on our annual tax liability from your rental income activity, and you're able to maximize your tax deduction so you can minimize your taxable net income, right? So that's the idea. So if you have questions here, let me know, but I'm going to just cover some of these. I'm not going to read every single one. And what I thought I'd do is comment on some of these where, there's a little bit of nuance, there's a little bit of trickiness. Sometimes people have a little bit of fear or ambiguity around it. And sometimes even your accountant may, tell you not to go for it. And that happens all the time. And so we'll start with some I think basic ones: education and training, startup costs. So I kind of put these in terms of like how you might start. So really, if you're doing courses, if you're going to conferences, attending workshops, if you're buying books, right, audiobooks, ebooks, whatever it is, all of that is going into your education and training bucket. And that is deductible for your rental property business. Now, obviously, if you're going on a vacation and it's unrelated to real estate, that doesn't count, right? But I know travel is on here on the next page as well. But if you're traveling to, Dustin, your conference or something like that, and the conference fees, the travel fees related to that, the meals, the coffees, all of that can be included in education, training, and travel related expenses. So that's an important one, because I think all of us invest in education. We all like to learn. I know I do. And we probably spend a couple of $1,000s a year on that. So you want to make sure that you plan ahead. And if you haven't done that for this year and it's already November, but you've been thinking about something, well, this might be a good time to go ahead and pull that in, especially if your NOI is pretty high and you want to, reduce that tax burden. Startup costs, this is a pretty straightforward one in terms of setting up your business and any fees that you incur related to that. Mortgage points, more related to lending, but again, it's part of the closing cost. You might see a breakdown, so you can deduct that. Interest, this is one that everybody knows, I'm sure, but not only on your mortgage payments, it could be related to other rental loan activity. So, for example, I have a personal loan; it's interest only. For example, that would be in this category. Property taxes, etc. Those are obviously pretty common. Advertising, so if you're paying for listings or if you're paying for lead generation and things like that, all of that would fit in there. Maintenance, repairs, and cleaning, that's pretty straightforward, but obviously the big one here is your property management fees, but also your routine maintenance type repairs that you might have, especially if you have older properties. Cleaning is obviously in there as well, so especially if you have STR, MTR type of properties, and you have cleaning fees that would apply there. Utilities, I'll skip over. Insurance or rental property insurance is very important to have the right insurance and right coverage, but also obviously to make sure you deduct that. Now, depreciation is a fun one. I think we're not going to cover cost segregation here, but there's your standard depreciation, which you can take, and hopefully your CPA is helping you, calculate that based on your adjusted cost basis of your property. But there are other things you can do, and an advanced strategy is cost segregation studies. So if you're unfamiliar with that, I think Dustin may have some content on that as well. And I know, Dustin, you've done it. I'm actually about to do one on one of my MTRs that I'm preparing. That's a 6 unit, and it was a full gut. So we're going to do a cost segregation on that up front. Again, planning for the taxes ahead. So that's happening now because I've got 2 months left. I want to get that done. So as we start earning income for it, later this year into next year, we're ready to go in terms of the accelerated depreciation that we can potentially achieve. I know there's a lot more complications to it, but just, that's an example. Now, let's go ahead and a couple of others. So travel, this one is, I think, really important. I think we tend to maybe underutilize this one. I think you just have to be more intentional and planned on the travel. So if you are going somewhere for a meeting, if you are traveling, if you're taking somebody out on dinner, if you're going to see a deal, right, and so on, anything related to your real estate business should be tracked and definitely pulled into the travel bucket so that you can deduct those expenses. And that's really important. So sometimes, if I go to Florida, to Tampa, to go look at deals or just meet some people that I'm thinking about investing with, that's a travel expense, right? That's your hotel, your car rental, your everything. Office related. This one is a tricky one. I think sometimes certain accountants, CPAs get a little nervous about it. It really depends on who you're working with. But if you follow the rules and if you actually execute based on the guidelines of the IRS, this is very important for you to include. And that could be not just the home office square footage based on that you calculate, but also the utilities and the internet costs and your phone bill and all these other things that you should be including as part of running your business, right? There's more advanced strategies here that people do, like creating a formal lease for the place that you're using, even if you own both properties. So one, the property management's leasing it from the owner, etc. You can do that, but I would look into that as well because it's really important, because I'm assuming this is one of the higher costs for operations. Professional fees, so this is your tax prep and any sort of other types of fees that you're incurring there. Legal is pretty straightforward. Obviously, that could be retainers, eviction. It could be contract drafting for lease agreements, for construction contracts. It could be, even subscriptions to services that you have. For example, I have a Rocket Lawyer subscription that I pay for every month, and I'm able to ask questions to lawyers all the time for free. Well, not for free, but through that subscription, which is pretty cheap. So that would be another example. So a couple of others: loss from theft and casualty. This is related to your insurance. So you do have to understand what's in your insurance, and anything that's not covered can also be captured here in terms of deductions, and some other minor ones, pest control, landscaping. So we did break it down instead of organizing it into buckets, just the obvious ones, some of them, and others that are important to think through. And the reason I share this again is so you understand that what are they and plan ahead for when you might be able to use them, basically. And if you're, again, uh, not planning ahead and then you try to wait till the end of the year to maybe maximize your taxes, you might be left behind and you might not be able to spend the money. Okay. So I don't know if there's any questions. I think we'll keep going and then take questions at the end. But if it's too fast, let me know. If anything is confusing, let me know. And so how to maximize tax deductions. So I'm going to recommend a 5-step process here that I personally follow, that I think I would encourage you to follow, that can help you. And it's actually pretty simple because I wanted to make it very simple and easy, something you can remember, but something you can actually also execute every month, and you don't feel like it's a burden and it's hard, and then you get behind on your performance analysis. So the first thing is organizing your finances with Baselane banking and accounting, and I'll explain how that can be done. And the reason I say banking, and you might be wondering, why are you talking about banking? We're discussing bookkeeping and taxes. Well, it's because you need to organize your bank account the right way and your other accounts so that you can understand all the performance, the debits and credits out of your accounts. And then with our accounting software, you can actually set up rules and things like that to tag transactions that allows you to automate some of this stuff so you don't have to always be tagging transactions. We've made these systems so it can be used by people that are not accountants, which is most of us. The second thing is develop a tax strategy. And obviously, this is just like a very broad thing. What this is saying is to actually work with your CPA and have a conversation ahead of time when you start your business, before you buy your next property, before you sell your next property, to really properly plan out your strategy. And this starts from, where's the money coming from? Is it coming from a cash account? Is it coming from an IRA, and so on, all the way to how do you sell properties and do 1031 exchanges, right? There's a lot in there. I'm not going to be covering that today, but it would be to invest some time and energy and some resources in terms of money, maybe, to talk to the experts and develop a strategy, have a plan. If you have a plan, then you can execute the plan. If you don't have a plan, you're not going to be able to execute the plan, most likely. So that's important. And so again, it requires tax professionals. So I would encourage you to do that. And I think if you do that, it will help you really think through the next time you buy a property, what's the tax strategy for that, right? That would be the question. Next, step 3, monthly bookkeeping and then quarterly tax review / optimization. So I'm going to show you what that means. So we'll actually just go and do it together, kind of, so that you'll be able to see it instead of just me talking about it. But really, the main thing to remember is you should be looking at your books at least once a month. Some people like to do it more often. So you're really on top of your numbers. And that means making sure all the transactions are pulling in accurately, making sure they're tagged, making sure that you caught any incorrect charges on your credit card, you caught any weird, charges coming out of your property management report, and so on, right? And the quarterly tax part of it is more to go back to the playbook for your taxes, when we talk about all these expenses, and look at where you are and see if you're capturing all these things. And if there are things that you're planning to spend money on, but you haven't, plan ahead on that, so to make sure that it comes into the year that you're going to be doing it. I'm assuming most of you do calendar year taxes. And if that's what you do, so you're looking at January to December, you want to make sure that if you're planning travel, if you're planning other big expenses, you're able to plan for that and make sure that you know what that's going to look like in terms of your financial statements. Step 4 and 5 are a little bit more fun. So find an accountability buddy / partner. Now, Baselane will certainly send you a monthly digest of what happened in your account. So we'll give you a little reminder. But I think it's good that I recommend having somebody that you can check in with. And this is just like everything else. When you go to the gym and work out, it's good to have an accountability buddy. Why? Because I'm actually going to go to the gym 3 to 4 times a week instead of 1 time a week, right? Same thing here. If you have a community like this, if you have smaller groups that you're on WhatsApp chats or whatever with, anything, having somebody to talk about the numbers with and analyze your performance, your NOI, it's okay. Maybe even just, celebrate a little bit of it because you worked hard for it and you earned it. Things like that, I think, can make it fun. It's really important, this social aspect. So I encourage you to do that. Again, these are part of your processes to set up. And when you do that, it will make sure that you actually do all the steps to get ahead on the deductions. And step 5 is make it fun. So I think this is one of those areas where when we talk about bookkeeping and numbers, ends up feeling like homework. And, we work all day, then we got the kids in the evening, then we got to do all the things for the house, and then you have to do the bookkeeping. It's like, geez, when does the day end, right? Well, I think the good part about Baselane is we are working on and have built, and I'm going to show you ways that you can automate some of these things so you don't have to do the tagging yourself, which is great. And so, a lot of that burden is removed. But on top of that, I think if you just make it a fun activity, give yourself a break, maybe have a drink, have a reward meal of some kind while you're doing this, go out in a cafe and do it, do something fun with another person sitting next to you. That can be another way to do it. Of course, this is sometimes very serious numbers, when you're looking at performance, but I encourage you to make it fun. If you make it fun and you have an accountability buddy, you can achieve the previous steps 1, 2, 3. So we've got this 5-step process that can help you organize and really stay on top of it. So I'm actually going to take a pause here, see if there's any questions, and we'll move into the live demo. And I'm going to show you how we can use Baselane to do all of this.
Yeah, so right now we don't have any questions, but if anybody does have any questions, please go ahead and type in the chat. And what I love about doing something like automating all of your bookkeeping, I mean, obviously you're going to have a bookkeeper, happen to have an accountant, and everything I do, I always run it through an accountant to make sure that I'm doing it right, and at least what they're telling me to do. So definitely everybody listen to your accountant, they're going to tell you exactly how to do it right. They're definitely worth their weight in gold. If you have a good accountant, they're going to make sure you're going to save a lot of money. So yeah, if you have any questions, put them in the chat. But I personally love how Baselane it's literally free, but you have rent collection, you have your property management, you have your accounting, you take care of your tenants. Like everything is all in here. And this is the reason why I was really hesitant to move from what I've been using for, I don't know, 3, 4, 5 years over to something until I knew it was going to be actually a good product. And so super glad. Now, Saad, you're going to be able to walk us through how to use Baselane right now, right?
That's right. So I'm actually logged in. Can you see my screen here?
Yep.
This is a demo account, so it's a test account, and I'm going to be showing you some information. So the data here is dummy data, but it's built to be able to give you a good demonstration. So I just logged in, and there's a lot we can go through in terms of how to set Baselane up. You can add properties. I'm going to do a quick 30-second walkthrough, and you can add any kind of property and financial details of the property inside of that, so you can track some of that information. From there, you can set it up for rent collection if you're collecting directly. If you are using a property manager and you don't collect rent, that's totally fine. I want to head over to the banking side. So here, the way Baselane banking is set up, it is banking built for real estate investors and landlords with a super high APY today of 4.46%, up to 5% cashback on our debit card. And also we offer unlimited virtual accounts and unlimited virtual cards. So let me explain what that is. So we're going to actually look at one of these accounts just as an example. And we're going to be showing you what we can do inside this account. And there's many different ways to organize, but this is one of them. And you can, cut it any way you like, but I'm just going to demonstrate. So here, this person, we've got Apex Investors LLC. They have several virtual accounts set up. A lot of our landlords actually like to just set up at least 3 accounts. So main account, a security deposit account, if you're collecting security deposit yourself, and a maintenance reserve account. These are all actually sub-accounts within a parent account. But the really cool thing is all of them have their own account number, routing numbers, and you can set up rules inside of these accounts that allow you to pre-tag the transaction category of that account. And so you can also set up accounts at the unit level, at the property level, as you wish. And so we've kind of done many different demonstrations of what this could be. But the fun part is, in terms of bookkeeping, I can look at an account, I can determine what address or unit that account is connected to. So let's say you have a property like this and your property manager is collecting the rent and they send you the rent. every month. You can direct them to send it to this account. It will automatically tag it as this unit, and at least that part is done. If you're collecting rent directly on Baselane, we'll also tag it as rent. So you'll have rent tagged as well as a unit tagged. So this is one of the examples of the rules where you can tag it to any specific property, and any activity in that account, debits or credits, are going to map to that unit or that property. That's one example. The other example is on the card side. So you could have several virtual debit cards. We give you a physical debit card that comes in the mail, but you can create virtual debit cards with their own unique numbers that can be added to your wallets or Venmos or Cash App, however you like to use it, because some of the vendors like to get paid in real time. And based on that virtual card, you can also add rules to that virtual card. So here's an example. Property manager's got a card. Obviously, it's hidden, so you can hide that with an OTP passcode. We've got the proper auto tagging on it, where we've got the property as well as the category. And this can be anything, right? From the transaction ledgers that we have, and all of our categories map back to Schedule E. And so the idea there is, if you're issuing somebody a card, let's say this is for property management and it's actually for repairs. Now they can use that card when they go to Home Depot. I may have logged out here, so I'm gonna have to log back in. Sorry, 1 second. They can go back and use that card in their wallet and be able to make purchases. And you can see all those transactions up front in real time. If you want to block the card or you have to revoke the card, you can do all of that in one go.
Saad, we had a question from JC really quick. How long have you guys been around?
We've been around for 3 years. We launched our banking product 2 years ago. We've got more than 30,000 landlords on the platform today across different types of products. And yeah, we're growing fast, and very excited to be getting out there finally and talking more about it.
Cool. And the bank accounts, they're actual like bank accounts. Like you create one bank account and then you create separate accounts as well.
Yeah, good question. Yeah, so technically, whenever you have an account like this with Apex Investors, let's say there's a business checking account, there's one parent account. That's the domiciled account. That's where the FDIC insured account, all the money in this account added up would be total 28K, and that's the one that's FDIC insured at 250K.
Now, so it's like it's one parent one with a bunch of little buckets, not each individual.
Okay. Exactly. And so these virtual accounts are sub accounts. They have their own unique account number and routing numbers. However, they are a part of that parent account. So you can transact directly with that virtual account if you're sending wires, money in and out of that account, all of that. And you can set all these rules, but it is part of the overall parent account. Okay. So we've talked about virtual accounts with some rules there. We talked about the cards. And so what happens is, I'm going to take you to the master transaction ledger just to show you there. On top of that, I'm sure you have credit cards and you have other accounts, right? You may not just have a Baselane bank account. Sometimes we have 10, 15 financial relationships. There's a lot going on. So you can actually add external accounts as well and connect them here through a service called Plaid. I actually used to work for Plaid before Baselane. And so Plaid is the #1 largest data aggregator in the US. They help you connect your Venmo wallet to your Venmo, your Chase bank account, for example, or your Baselane bank account. And so you can connect your other external accounts. And that's really important, especially if you have credit cards, because then you can pool everything together into this master transaction ledger, which is updated several times a day automatically. So as the transactions happen, it's coming in here. And from here, this is where you can do the one-click categorization on the bookkeeping side. And we're going to do a little bit of this together before we head over to the analytics and the tax reporting. So here we've got, again, different accounts. You've got different types of, descriptions coming in, different categories already tagged. And so one of the things we can do is, let's say we're coming in and, we've got a lot of uncategorized transactions for some reason. We can just filter for those uncategorized transactions. Obviously, when you do these kind of things, you have to know sort of like where the money was spent to be able to categorize them, right? So there's a little bit of knowledge that you have to have. And so you'll go in here and start tagging things. So let's say this was, Uber, this was a travel expense, and I'm just going to put it like that. And if I want to tag it to a property, sometimes it's general, but I can tag it to a property or even a unit. I can go here and quickly do that as well. Now, sometimes if you want to say, actually, no, it's for unit A for some reason, not the property, you could do it that way. If you want to add a note, you can add a note. If you want to upload receipts related to that, you can also upload receipts in here, right? Now, let's say there's a bigger transaction, but you bought supplies or something for several properties or several units through one purchase. Or let's say, you had to travel somewhere, whatever it is, you can actually split transactions. So let's say I'm going to take some example. I don't know. I'll take this. And this is $200 of income, but I actually want to split this transaction. I can click here and go to split, and I can split the transaction. So I can pick the categories. I'm just going to say, for example, this is revenue. So I'll just say rent and rent, but I'll say this is, one is for unit A and one is for unit C, just as an example for you. And you can split the amount. So that's $200. Let's say I do 50 here and 150 here. You can split the transaction. This is really useful for mortgage transactions. I'm going to show you in a couple of minutes why that's really important. You can also bulk edit transactions. So let's just say you like to go to Starbucks, like I do, and you like to have your coffee and all of that, and that's where you have all your meetings. You can search for transactions here and select all of them and bulk edit them. So this really helps you with kind of cleanup, if you will, because you don't want to be doing repeat work all the time. So notice like all these Starbucks transactions are not categorized. So I'm going to edit all of them. I'm going to categorize them under meals. There you go. You can add it to a property, or you can leave it as a general expense for the business. So let's just say we don't add it to a property. We just leave it like that. And there you go. Now they're disappeared because they were categorized. You can hide transactions. You can filter ones that have attachments. You can run any type of date filter. You can filter by the account, meaning the source of the transaction. You can filter by the categories if you want to audit them. You can also filter by the property. So as an exercise, what I wanted to actually do with you guys was to show you one example of what the work might look like in terms of minimizing your expenses, but also maximizing your tax deductions. So I think we're going to take one of the properties here. So here's an example of a property that's got 3 units, and we're looking at the analytics, the high level performance for the 2022 year on a monthly basis. The dark blue is the income, the light blue is the expenses. And we have a summary here that says we have $15,000 of net cash flow. That's one way to look at it. Now here I can audit any of these expenses. Like, why is this line so high? What happened here, right? Like, where did the money go? And you can see all the transactions that fill that as well. Sometimes you miscategorize things and you want to catch that. So this is a way to categorize, come here and analyze and make sure that it's done right. Now I'm going to take another look at it from a financial statement point of view. And I'm just going to look at the inflows and outflows. I just want to see where it came out at. And I know what the rents are. I know what probably the expenses are because it's my unit. So I want to audit this and make sure like it's tracking right. So here we've got $39,000 of income, revenue, sorry. And then I noticed that there's some taxes, looks about right, but for some reason the repairs are very low. So I probably missed certain transactions that were not categorized, or they didn't pull in maybe. Maybe there was a data issue. Sometimes that happens. Maybe you deleted it. So this number looks low, so I can go back and figure out where that number is. If not, I'll go back to check my expenses again and make sure this is accurate. Now, the other thing you'll notice is I've got mortgages here. That's great. And some security deposits on the side. So, okay, now I'm getting ready for taxes and I want to look at my Schedule E. How does that look? Now, the only thing that we don't really cover in Schedule E is depreciation. Depreciation is obviously complex. We don't have a way to handle that yet. We'll be launching something next year that can enable depreciation calculations here. They're quite complex, so we leave it more to the manual CPA calculation to do that part. But here you have the Schedule E view. Again, your earnings, all the different expense categories. And then I also noticed that my mortgage interest is not there. That's probably because I just classified as mortgage payments and I can't deduct the whole payment. I can only deduct the mortgage interest. Okay, no problem. So what we're going to do, I'm going to show you live here, is we're going to go in here and look for that property. I'm going to go to the time period. I'm going to go to the category. You can click it, you can type it, up to you. And I'm going to have to just make sure I filter here for this one. And so I'm going to get all of the mortgage expenses for that property for that year. Let's say, we're preparing our financials, look back, and we notice we didn't split our interest and our principal payments. So we can do that here. Now, you might want to do it at the monthly basis. I'm just showing you one way to do it, which is at the annual, the end of year basis. Let me see here. So actually, you do have to do it here. Sorry. So I'm going to go here and split this. And so basically, I'm going to say this is my mortgage interest, and then this is my mortgage principal. And again, it's for this property here. And there we go. And I'm just going to make up some numbers. So let's say this is like $800, and this is. So this allows me to split the transaction. And just to demonstrate what that means is going back to the analytics and the cash flow statement. What we're going to see in the Schedule E report is that that 1 month we just did should now show up. There you go. Mortgage interest payments. Oh, sorry, I did the wrong period. 2022. So it didn't come in here. So I may have made a mistake. So I got to go back. So this is part of the process. So let's go back and look at mortgage again. We're going to look at the property that we were talking about. Now, this is also a UAT account, so it may not do live, but I should do it. And I'm going to do 2022. Yeah, so we've got November 2022, mortgage principal, mortgage interest, and the Muller apartment. So that should show up as mortgage interest payment. There you go. So yeah, that should show up here. It might be because it's a UAT account. It's not showing up here, meaning it's a lower environment account. It's not in production. So the idea of this is to make sure you audit your expenses and you make sure that things are flowing in. And then I also wanted to show you one other thing you may have noticed. So what do you guys notice about this operating expenses of this property? Like, what's the opportunity here? Like, I'm sitting here, it's November, almost end of the year. I'm looking at this. Obviously, the mortgage numbers have to come in, but even when they do, I'm still going to be up 15K, roughly, maybe 20K on taxable income. So what does the group think here? Like, what can we do here?
You go and deduct your expenses.
Right. So one thing that's really odd is there's no advertising here. There's no auto and travel, right? There's no cleaning and maintenance. Like, I didn't book my insurance, so that's missing for some reason, right? And so I got to go make sure I paid it and it was captured in here and the account wasn't connected or something like that. Management fees are not in here. Repairs numbers look low. And I probably did buy some supplies. Maybe I forgot to add them, right? Maybe I didn't connect that credit card. And this is the exercise, right? So that's why when we started with this conversation and we said, these are all the different options that you have to deduct expenses, you want to look at this list and make sure that, you don't wait till the last week of the year to book all those expenses. You want to make sure that you put them in here if they're not in here. Sometimes, let's say you did it through CAC. Sometimes maybe the credit card you use wasn't connected, right? That's fine. Sometimes you can add it manually. So you go back to your transaction ledger and you can add transactions, right? So you can fill this form out and add a transaction as well. And so this is the very simple technique of doing this on a monthly basis so the numbers are accurate, because if you wait till the end of the year, you're going to be just forgetting half the things that happen. So you won't know why this number is the way it is. And the other part of it is plan ahead. So if it's November and we're looking at that property and it's got major expenses missing, right? That's a problem. We should have had expenses in there, and we have to go back and make sure that we either plug them in if they're not there and add the receipts for that, or if you haven't spent the money, maybe think about that, right? Let's say that you are going to be up and you're going to have a huge tax liability here, and maybe you were planning to do a conference or some major education purchase or something like that, whatever that is, but you didn't do it. You can do that now. Let's say you were deferring a repair that you kind of ignored, and now you're seeing that maybe there's some wiggle room here. You want to go ahead and do that repair because repairs are expense, right away. The other thing is, which again goes into depreciation and tax planning, is there might be some capital expenditures that you want to do that are larger. They're not repairs, they're larger fixes and updates to the property that get amortized. That still brings down your tax, right? Because the depreciation number will go up. So again, looking at all those things through this type of cash flow analytics, but also then the financial statement analysis will help you. And then when you're all done with that and things are looking great and rosy and you're ready to go, you can come here just to finish up, select your time period. And this one, we have the 2022 as the mock-up, so you can see for last year. You can select it at the property level or all of your properties. I think your accountants are going to like the property level view. They like to do it that way, up to your CPA for tax prep. Now, this will export the transaction ledger, the cash flow statement, and soon we're going to be adding all the receipts you uploaded. They're going to also auto export into this. So it's going to be a folder. You can send that folder through email or whatever to a drive to your CPA, and they are going to love you. Because again, you're not going to be walking in with a box of receipts. You're going to be walking in with proper transaction ledger, a actual professional financial statement. And again, these financial statements, you can run them any way you like. I just ran the Schedule E one, but you can just do inflows and outflows. You can also do net operating income, up to you. If you want to do a custom report, you can do a custom report by selecting the categories you want in that report. And you can export that into CSV. It's nicely formatted, and you can share it, save it for your records, and also use that to analyze your planning for next year. Any questions?
So we have, JC had a question about the business itself, like Baselane. Are you guys, what round of funding are you in? And as well as, are you going to be getting more funding?
Yeah, actually, we are well capitalized. I cannot publicly share that information, unfortunately, but we are in terms of like stages, we're at Series A.
Very cool. Another one, JC, do you want to ask about the 2022 taxes? It's okay. Maybe she's shy.
Hold on. No, I was just
There we go.
trying to get off mute. No, but I think you just said it. My question was exactly what you said. I would love to be able to put together a whole package with the receipts included, especially, Series A's. Just want to make sure I have that as a backup. And it sounds like that is something you don't have yet, but you're going to have sometime soon.
Yeah, I'll just say if there's any kind of, I understand, like, we're a newer company, so we're well capitalized for several years. I'll just say it that way, so it's clear, and we're growing. So knock on wood, with your support, we can continue to grow. Yes, so you can see the receipts. Yeah, we're working on adding that. So by the time that you're going to be sending this to your accountant, let's say sometime end of January-ish next year, we're going to have that feature ready. So you can export that, the receipts packet as well. It's on the roadmap.
Amazing.
Yeah. And one thing I'll say is we're very customer centric. And this is one of the reasons I think Dustin also liked us, because we take your feedback. We take feedback. We take all the feedback we get very seriously. We're very lucky and blessed to have the feedback. I always appreciate it because people are really passionate about this and they love what we're doing, but they also have a lot of ideas. So we take that feedback very seriously. We write it down, we tabulate it, we debate what we're building next with a lot of passion every quarter, and then we build our roadmap. So that's what we've been doing, and we're continuing to do that. And yeah, that's how we're determining where the company's headed in terms of the products and features that we build.
So is there an Android or Apple apps that you would be able to use and download?
Yeah, at the moment we're desktop only and mobile web browser enabled. So there's a lot of functionality you can do on the web browser. We do not have an app at the moment. That is something second half of 2024. There's kind of two use cases for that. One is tenant portal for the rent collection folks. The other big one is banking. And so on our radar, but not prioritized until most likely second half of 2024 at the moment. And what I'll say is, again, we're customer driven, so people really do their serious work like this on desktop. That's what we find, and so we haven't had that need to go right away to app. We're, as you can see, we're building a lot of the components, and so yeah, definitely we'll be building an app. It's a matter of timing.
I think for me, looking at the app would be just being able to look in your bank account, be able to
Right.
pull up your bank account, see what
Absolutely.
transactions.
Yes. Absolutely. Yeah. I
Cool.
think
Another question was, can you repeat, how do you deal with receipts that you want to add in there?
Oh, yes, sure. So with receipts, let's take a transaction like this. You should be able to click on any transaction, and there's a click or drag here button right there. You can click on that, and that will allow you, that'll open up a file upload, and you can upload the receipt from there. You're able to also do that from the browser, mobile browser.
Cool. And then we have, let's see. So would you use a responsive web to upload receipts from your phone?
JC sounds like the technical web developer.
Yeah, sorry, I'm a UX researcher. Yeah, so yeah, I think that's the key use case for having an app, is that it's really just a pain in the butt when you have, especially things like dining receipts and stuff, and you want to just put them up without having to like take a picture with your phone and then transfer them to web. That's, to me, the biggest use case for having that on an app.
Yeah, for sure. No, we understand. I appreciate the feedback. Yeah, so that's not there yet. You can on your browser upload a receipt if you've taken a photo of it. So we're kind of in that V1 stage of it. That's where it's headed. I mean, that's where most of the kind of best of breed solutions are right today. And eventually really more digitizing it too. So that's where we have to go. But it's not there yet. So you can upload it, but yeah.
Thanks.
Anybody else have any questions? Looks like we're good on questions right now. Is there anything else in Baselane that we should look at? In fact, well, I did have a question. So one question came up, talk more about the banking aspect, which was a great idea, because I was thinking about there's 4.45% APY or interest that you get on the money you hold there, which is fantastic. Usually I would use other banks that have high interest, but this is the same. And so I'm moving all my money over, as well as talk to me about it says up to 5% cash back. Is that like with a credit card? Is that a debit card? How does that work out?
That is with the debit card, whether it's the physical debit card or the virtual debit cards. There's 1% cash back on everything, and there are some limits and terms that apply. I don't have them handy here. And then there's on real estate related categories like Home Depot and things like that. That's where you get the 5% cash back. That also has an upper limit in terms of the total. And that, if you want, I can send that to you as a follow-up. I don't have the terms right in front of me here, but there's a total spend limit in it, but that's where you get the 5% cash back. Basically.
Okay, that's cool, because I know like Lowe's, if you get their credit card, they give you 5% cash back. Home Depot's probably the same, but if you have it all under the same, which is great. I don't want to have a bunch of credit cards. Now I know my wife she's always like, well, don't use your debit card, because then they could take money out of your account and then you're stuck. And I remember reading on here that you guys have, was it Visa zero liability protection for the debit card? Explain about that.
Yeah, that is there. To be honest, I'm not directly 100% the expert on that specific topic. I can follow up with you though, but because it is a Visa issued debit card, we do have that available as well. Sorry about that. My phone is going off here.
Yeah, it's okay, cool. Yeah, go ahead and talk a little bit more about the business banking, and we should be wrapping up in just a minute.
Yeah, so overall, again, I'm in the banking module here. So one of the key things that folks like to do with us, and we have an excellent customer experience team, is we talk about your banking setup as it relates to your portfolio. And everybody has a unique situation. So there's many different types of questions that come in terms of, hey, I've got a personal account. I need a business account for 3 different LLCs. If I've got this entity structure, what's the right way to set up the bank account? So we do spend time with you on one-on-one calls to help you set up. That's really important. I always talk about that because then you can really take full advantage of this. Now, this can be used in many ways. We talked about the high APY, the debit cards. We've talked about the virtual accounts and the virtual debit cards. I'm sure you've heard of, Profit First, and that's also possible here. Basically, this is an example of an account where you could implement the Profit First methodology using our bank accounts with these virtual accounts. So here's an example of one where you can set it up and start, transferring money based on that, where you get the profit X% first, and then you allocate the money across the other types of spend after that. That's another advantage of that. And really, for me, outside of the rewards, the banking is all about organization. Whether you have your STRs, midterms, or long terms, the rules really do help you as you scale, right? So if you have a lot of properties, you're not going to remember every single thing that's going on. You're going to spend hours and hours trying to figure out how to reconcile things. That's where the value comes in, is when you even get above 2, 3 properties, things get complicated. And so I think for me, this is where the value is setting up these accounts the right way, and then making sure these virtual accounts and cards have all the rules set up, so that when you come in, maybe the category or the property is already tagged. All you have to do is quickly categorize the transaction. And where this is headed is we're going to be adding more reporting so that it helps you with the analysis, but also more automation in terms of pre-tagging categories as well. There's a couple of other big features coming on the banking, so I'd love to share that with you, which is a roadmap, and I'll finish there. So one of the things that happened, last year was the kind of concern around smaller banks and the FDIC insurance. So what we're going to be bringing is a very high FDIC insurance coverage of 1 million and above as well. So that's coming soon. We're going to be bringing physical checkbooks. That's going to be coming eventually early next year, same day ACH for faster payments. We already have free wires and free for now. I would say, obviously, we cannot offer free forever, as well as ACH payments. But we're going to be also adding same-day ACH payments, so you can do faster transactions there. And then bill pay and what we call rule-based or automated transfers. What that means is you'll be able to set rules so that when money comes in, you can split it into several accounts if you like, for example. So all of that is on our banking roadmap, and our plans are to really build those out as soon as possible. And so within the next, I would say 3 to 4 months, all those features are going to be launched. And we're very excited about that because that really brings our bank to the level where we'll be actually offering you more features and rewards compared to pretty much anybody that's out there. And not to mention, then you have the property management and all the bookkeeping here, which will allow you to really take advantage of and run your real estate business smoothly.
Awesome. So, and you asked one a question about being FDIC insured. That is the high interest portion insured, I would assume.
Yes. So everything, each bank account at the entity level. So for example, if you have Apex Investors LLC, that's an entity and they have a bank account, that's insured up to 250K at the moment. And there's details, if you'd like to know, we can send it to you. There's articles and videos about that as well. And was there another question? So
yeah,
whether it's a deposit or the interest, if it's in the bank account, it's covered.
Got it. And what about PayPal or Zelle connecting and working with Baselane?
So yeah, with things like PayPal and Venmo or Cash App, you can use those. I use it myself, sometimes a pay cleaner or things like that as well, handyman or something like that. Zelle is not possible as of yet. We are looking into options for that. Zelle is it's kind of owned by a consortium of large banks. There's an interesting history behind Zelle of how it started. And so it was more for an early warning system, and then it became a commercialized product for retail banking. But it is not available outside of a small group of larger banks in the United States today. However, we are looking into, and there are conversations at early stages where Zelle might be opening up to more of the what we call the smaller and long tail banking infrastructure in the US, which is super exciting because all of us deserve a tool like Zelle as well. We shouldn't be penalized if we're using banks that are, more built for us and not, for the average person. So that's a long-term play. I can't really say if that's going to happen. It sounds like they're headed in that direction. We're very connected to the fintech community. That's our background. And so, we'll be staying on top of that because everybody asks about Zelle and we wish we could give it to you, but technically we can't. And so, yeah, we've got all the other options. You've got, ACH, wires, eventually same day ACH will be available and bill pay. And we'll do our best. If it's available, then we'll build it for our customers.
Well, cool. Well, Saad, so we're